Hello, and welcome to Flight Global Focus, the essential podcast for trusted aviation insight. I'm Flight Global editor John Hemmerdinger, standing in for Lewis Harper, who I regret to inform you has departed Flight Global after many years leading our airlines team. We wish him the best. I'm joined today by Flight Global Airlines reporter Howard Hardy and our contributing airline reporter Ned Russell, who actually used to work full-time at Flight Global. So Ned, welcome back.
Thanks so much, John. It's a pleasure to be here.
Hi, John.
Early next month, Howard and Ned will journey south to Rio de Janeiro to cover IATA's annual general meeting, an event that never fails to attract top executives from many of the world's airlines. There's no better venue to gauge the pulse of the airline industry. It's an opportunity to learn what's really on the minds of this industry's leaders, a chance to bump casually into countless chief executives to pull them aside for a candid chat. One topic on their minds is surely the war in Iran and the resulting doubling of fuel prices. Many carriers in recent months trimmed capacity in a bid to offset higher fuel bills. But the fallout became more real on 2 May when U.S. discount carrier Spirit Airlines ran out of money and abruptly shut down. Spirit's financial problems were long-standing, but fuel prices accelerated its demise. Howard, with all that's going on, why don't you give us a description of what you think the mood of the aerospace industry is these days?
Yeah, I mean, if we aren't tired of talking about fuel already at this point, after kind of getting through the bulk of airline earnings season, at least in North America, we will surely be tired of talking about it by the end of the AGM in Rio. This has really been the top line talking point in the industry through earnings season. Global carriers are all sort of in the same boat of riding the volatility in fuel prices and making adjustments to their schedules. We're seeing airlines around the world follow roughly the same playbook. They're cutting flights that are sort of fringy or outright unprofitable. They're tightening up frequencies in some cases, and they're generally raising airfares to pass along the higher costs of fuel onto their customers. There's been a lot of talk about when airlines believe they'll be able to get to 100% pass-through, or when all of the extra costs will be passed on to customers. United is focused on getting there by 2027, for example. Some others think that they'll be able to do it sooner. I think that really speaks to how airlines are preparing for long-term effects, potentially well beyond the straight reopening. What will be really interesting is seeing at what point air travelers stop paying for those higher airfares. Like at some point, this will start suppressing demand, and what happens then?
Yeah, that's the question, is whether customers will pay for these higher prices. And yes, airlines are cutting capacity, but we don't know whether their customers are going to stay on board. Ned, what are you seeing? How do you view the industry?
I see a lot of the same trends that Howard's outlined, but I really think the industry is on something of a razor's edge. Headline capacity reductions like Spirit's collapse and the temporary shutdown of Gulf hubs have both created opportunities and challenges for airlines. Take, for example, Lufthansa that just reported their first quarter earnings. They saw revenue jump as travelers booked away from the Gulf, but at the same time, they had to move quickly to counter higher fuel prices, which included the shutdown of their Lufthansa CityLine subsidiary. At some point, travelers will just stop paying higher airfares. And then there's the larger question of what happens if the fuel shock turns into a larger economic slowdown. I don't know the answers to either of these questions, but like I said, airlines are walking a very fine line right now.
Thanks, Ned. Let's dive into what happened with Spirit. It seemed like it was a long time coming, and then it was abrupt. Howard, you've covered Spirit's saga for years. Were you surprised by its shutdown?
I was not surprised that Spirit collapsed. A lot of people in the industry have seen this coming years in advance. Scott Kirby, the CEO of United, has been openly discussing this possibility during earnings calls, dating back many earnings calls, and has also talked a lot about the squeeze on low-cost carriers more generally. Really, I think it's remarkable that Spirit has kind of staggered along for as long as it has, or as long as it did. I thought they might go under at the end of 2024 when they're kind of at the height of their engine-related aircraft groundings with the Pratt & Whitney's GTFs and how that kept a lot of their A320neo aircraft on the ground. And we have all talked about this as a group, Ned and John and I, about how this was all really painful to watch. This was sort of a slow-motion disaster. It was also public, too, with the bankruptcies and the fleet reduction and exiting hundreds of markets. Lots of people lost their jobs while Spirit shrank, and seeing it coming, I don't think made it any less nauseating to watch. Even the bit about how rising fuel costs turned out to be the death blow, I feel like that was at least somewhat predictable. I don't think we could have anticipated just how sharply fuel costs would rise in such a short time following the start of the war in Iran. It took a really dramatic geopolitical shock for that to happen. But this is a predictable part of running an airline business. Airlines do plan around higher fuel costs because that is going to happen eventually. You can look back at the past few years, the way Spirit struggled so badly, and that was really while fuel costs were low. That was like a generally favorable cost environment. So I was surprised by certain elements of how Spirit had exited the market. Like, for example, the government bailout attempt. US airlines have been bailed out by the feds before, but always as a group. Like during the COVID pandemic and after 9/11, singling out one struggling airline would have been strange, though. The government taking a stake in the carrier would have been really unusual. Trump was talking publicly about essentially buying Spirit and flipping it for a profit. So ultimately, that didn't happen. Spirit's creditors kind of balked, and the rescue package did not materialize. Cash flows finally dried up, and Spirit had to shut down. But the bailout attempt was the most surprising twist in the Spirit saga for me.
Yeah, and from what I understood, Spirit had been seeking $500 million to keep going, and just how long that would have kept Spirit going was an open debate. Maybe maybe a few months. And if fuel prices didn't decline, they might have been in a cash crunch again. And it seems like the creditors just thought they could get more for their money by selling off the assets. But the Spirit saga really highlights, as I suppose you mentioned, that they aren't the only one that's struggling. Other U.S. low-cost airlines have been in a similar boat, though certainly not even close to the extent of Spirit. So let's just recap why are they having so much trouble? I'm talking about the discount side of the U.S. airline industry. Howard, do you want to take a crack at that?
Yeah, there's just really so much going on here. I mean, I really feel like maybe the top line issue for low-cost carriers in the U.S. is the relationship to major U.S. airlines, which have really been good at tightening the screws on them. Kind of in the big picture, we've had this push toward premium products throughout the industry. A lot of airlines, majors and low-cost carriers included, have made an effort to offer more premium seats in their cabins in this effort to attract more high-paying customers. At the same time, the cost advantages that low-cost carriers relied upon to offer those lower fares eroded over the past several years. That was because of rising employee costs, and just the cost of paying their pilots and flight attendants got increased. At the same time, we had that GTF engine issue in the case of Spirit, where a lot of their fleet was grounded on a rolling basis for years now, where they had dozens of Airbus jets just parked, and that wasn't making anything easier. Also, there's this big picture strategy that they employed where they're basically borrowing money to grow rapidly. Spirit and Frontier were among the fastest growing carriers in the United States for really the whole decade of the 2010s. They were employing the strategy that involved sale leaseback deals, where they're essentially pushing the bill for acquiring aircraft into the future. And eventually that bill comes due. A big part of the pressure on Spirit and some of the pressure that we see facing Frontier Airlines, for example, moving into the future, is that the bill is coming due for these aircraft, and that they have heavy standing debt loads that eventually just become too big of a strain. And like I spoke about at the beginning, pressure from major U.S. carriers is a really big factor here. And I think Ned can really speak to that.
Thanks, Howard. Yeah, I mean, all of these are excellent points. And one of the big challenges the ULCC segment faces in the U.S. is really the fact that American Delta United proved themselves adept at countering their low fares with their own basic economy offerings over the last decade. On sheer size alone, I think it's forgotten by many that the big three are able to compete with essentially the equivalent of three additional ULCCs in the market on their own planes while still being able to sell, those premium seats that they have, offer immensely popular and lucrative loyalty programs. These really attract passengers, things that the budget airlines couldn't offer. The airline industry is a scale game, and without scale, the budget carriers who competed directly with the big three really struggled to win, and that's sort of what happened to Spirit. I want to note that the likes of Allegiant and Sun Country, which are soon to be one airline, is a bit different from Frontier and Spirit. They often fly on routes with little or no competition, whereas Frontier and Spirit would often take on the big three directly in their markets. Some people refer to Spirit and Frontier as spill airlines. Essentially, if someone wants to fly between, say, Dallas and Chicago, and they can't afford a ticket on American or United, Spirit would offer a once daily flight at a bargain fare and basically pick up those passengers. So there's some difference there. Allegiant and Sun Country, of course, have some challenges, but they're a little different from the Spirits and Frontiers out there. But it's really amazing how the major carriers have been able to use their scale and their size to really put pressure on the segment.
I'm glad you mentioned Sun Country and Allegiant. I live in Southwest Florida, and we have several airports here, but Allegiant has a strong presence in a little airport called Punta Gorda, which is sort of sandwiched between Sarasota and Fort Myers, and then St. Petersburg, St. Pete Clearwater, which is a small airport between Tampa and Sarasota north. And Allegiant's the only airline that serves any of those airports, and they fly these leisure routes to places where there are very few flights, like South Bend, Illinois, and Asheville, North Carolina, upstate New York, Plattsburgh, places like that. It is a very unique market, and the flights go up and back in one day. It's a very simple operation, usually once a day, but not even every day, several days a week, only on the high demand days. So they have stood out in that way. Ned, so Spirit gone, the pressures still remaining on low-cost carriers. What about other failures? What's the risk there?
In the US, I really don't see any other airlines failing immediately. Of course, as I mentioned earlier, if the economy turns and fuel stays high for an extended period of time, that anything can happen. But as one industry insider once told me, it is very hard to kill a US airline given our bankruptcy laws. Chapter 11, which is reorganization, allows airlines to soldier on for a long time as they move through the courts. And there's a lot of vested interest from lessors to engine manufacturers to lenders who want to see these companies continue and are often willing to work through the courts to make that happen. So Spirit, they sort of had reached the end of their rope following a failed merger with JetBlue that collapsed in 2024, was blocked, and then two bankruptcies in 24 and 25. But other airlines like Frontier, while they have their issues, they are far from that point. Frontier executives spoke last week. They presented their earnings, and they really emphasized to Wall Street how they have more than $900 million liquidity in the bank. That's a signal that they are not close to liquidating. Spirit, when they ended, had under $200 million, might have been even lower. But Frontier has money to keep paying their bills. They have their challenges. They had a negative 20-something point margin, which is nothing to laugh about. But they are continuing to fly, and they see gains from Spirit's exit. Executives said that in markets where they competed directly with Spirit, they expect to see as much as a 5-point unit revenue boost immediately, and it could be higher. That's significant, especially when they're already talking about fare increases across the board for fuel. JetBlue is also an airline that people have raised questions about its, how it's doing. It continues to lose money. It has significant debt, but they are also not close to liquidating. They have money in the bank. They have assets they can leverage, which is an important thing. They have slots, aircraft, all kinds of things that if they need to raise money, they can. And they recently did go into the market with a $500 million aircraft-backed loan. They haven't spoken since Spirit's collapse, but they are also moving quickly to add flights in Fort Lauderdale, which is a key focus city of theirs, and really turn that into a north-south connecting base for them. It would be a South Florida hub, essentially. So I don't see other collapses soon. But again, like I said, if the economy turns, if fuel stays high for an extended period, and I'm talking 6 months or more, anything can happen. But right now, I think other airlines are okay.
Let me throw this question in. Spirit's failure has turned into a big political controversy in the U.S., or it's simmering down now, but the Trump administration blamed the Biden administration for suing to stop the deal, and a judge apparently appointed by the Reagan administration actually agreed with the Biden administration that the JetBlue Spirit merger would create anti-competitive effects. Do you guys, and I'll start with Ned, and just give us your thoughts. Is there merit to that? And I'm asking more broadly about the general state of the U.S. low-cost sector. Would Spirit have been worse off in JetBlue's hands? Would it have been better? Do you have any insight into that?
My guess is that if JetBlue and Spirit had merged, we'd probably see the resulting JetBlue in bankruptcy right now. Both airlines, like I said, significant debt. They were both losing money. It's that sort of old business strategy of merge together two failing companies to try to make one successful one. Whether or not the judge had blocked that merger, Spirit was already challenged. The deal, which came out of a bidding war, which Frontier also participated in, was a sign that they knew that the airline needed to do something because they were losing money. The last year they made money was 2019. So I really don't think the blame lies at the foot of the Biden administration, regardless of what you think of the ruling. Spirit was challenged and looking for options at the time. A merger seemed to be the best option in 2022 when that deal was announced. Shareholders picked JetBlue simply because they offered the most money, not because it was the best, most logical deal. And I really sincerely think that we would be seeing a struggling JetBlue right now if that deal had gone through.
Yeah, interesting. Howard, do you want to add anything to that?
Yeah, I absolutely agree with what Ned was saying with regard to the post-combination company likely facing a lot of the same struggles that both carriers have faced as separate entities. In retrospect, you could really say that JetBlue was trying to overpay for Spirit. They were offering $3.8 billion in an attempt to outbid Frontier at the time. The Trump administration was just talking about a $5 million acquisition for the airline in its much diminished state. And you could actually argue that was an overpay as well. I think that if that deal had gone through, JetBlue would be in a much, much more difficult position than it is now.
Yeah, good point. When I think about this, what comes to my mind is that it seemed, well, Spirit knew it was in big trouble. And the degree to which JetBlue probably knew too. And that's why they wanted to merge. And the carriers thought that this was the best possible deal and the best way to keep the whole thing together. And they might have been wrong. And maybe JetBlue would have gone down with the bigger ship. But we don't know. And then I suppose asking that question in retrospect is just sort of a matter of opinion at this point. We do have some indicators, but who knows?
Who knows is right, John. We can all give our opinions, but we don't have a crystal ball.
John, you reported last week that other U.S. discount carriers intend to seek government financial aid even after the potential bailout of Spirit fell apart. Can you tell us more about that?
Sure. It was reported actually several weeks ago. So first we learned that Spirit was seeking $500 million from the government. And then it was reported that the other low-cost airlines, the Association of Value Airlines, which consists of Breeze and Avelo, those are two airlines that just started a few years ago during the COVID pandemic or the years leading out of it. And also Frontier is part of that. And so are Sun Country and Allegiant, even though they're considered to be healthier than the others. But those carriers had then gone to the Trump administration and requested $2.5 billion in government aid, so separate to Spirit. And of course, the government turned down Spirit's bid, and we didn't hear any decision about the other airlines receiving money. It's not happening immediately, obviously. And then last week, U.S. Transportation Secretary Duffy sort of poured cold water on the idea of bailing out the other low-cost airlines. And he said that he didn't think it was necessary right now, but he did mention it would only be as a last resort. Interestingly, Avelo Airlines chief executive Andrew Levy, who used to lead Allegiant, and he was with United, I believe, before that, he told me just a few days ago that these value airlines are not giving up their goal of securing government aid. He said they're going to return and they're going to try to persuade the Trump administration to reconsider and give them some amount of aid. And he didn't say how much, but he does make an interesting point. And his point is that the U.S. government allowed the U.S. airline industry to become consolidated into a position where American, Delta, United, and Southwest control 3/4 of capacity. And the government allowed that by approving mergers over really decades, or particularly the last decade or so, that brought the current big four together. And his point is that skewed the market, that the government failed to protect competition and created this monster where these new low-cost airlines, and Avelo and Breeze are tiny compared to really anyone else, and where it's hard for them to compete and they're not at a level playing field. And Levy also cited the COVID government bailouts of the airline industry, which were more than 50 billion, and they were positioned, or they were actually intended to preserve jobs. They were fought very hard by the unions, and they secured the money. But what happened was the airlines, the major airlines particularly, actually cut pilots, and they didn't fire them, but they let them go through early retirements. And there was a lot of downsizing, and they came out, these big airlines, according to Levy, came out much, much stronger than they would have been otherwise, with more money than they'd really ever had, stronger financially than they'd ever been, and that they were just more competitive. And he also said that he thinks several of them would have had to file bankruptcy during the pandemic, and he cited American, JetBlue, and United as being in a really precarious financial position, and probably would have had to go bankrupt, and then would likely in that case have had to shrink. And that never happened. And he says the big airlines came out much, much stronger. And for that reason, he says, even though he's a free market capitalist, that he thinks the government got too involved with the bailouts. And for that reason, the discount airlines, there's a good case to be made that the government should support them for the purpose of retaining competition in the U.S. airline industry.
One thing I would add is just, how you're talking a lot about how Levy's talking about the free market. And I think free market advocates would say the Spirit saga is just sort of how this goes. You could argue we don't really have a free market in the textbook sense. Like Ned mentioned earlier, the Chapter 11 process keeps airlines alive, perhaps beyond their natural expiration date. But when airlines struggle to compete in the market, when they have sort of structural business model issues that make it difficult to be profitable, you could argue this is the natural way of things, that they end up exiting the market and other carriers move in to kind of fill that vacuum.
Right. And I'd add to what you just said, Howard. Airlines already moving to add capacity in a lot of Spirit markets. When airlines have collapsed in the past, airlines have quickly moved to take advantage of those gaps in the market. I don't doubt that we're going to see much of the capacity Spirit pulled out backfilled in the next year or two. It's not going to be immediate, but it's going to come back. It creates opportunities for other ones and new competitors and new dynamics.
Do either of you guys have an idea of where all the Spirit jets might go? Who might pick them up?
I read an interesting thing the other day about Spirit. So most of the planes are leased. However, right now the engines on a lot of them are actually more valuable than the planes themselves. Some lessors may either part out the planes in favor of selling the engines, or just mothball the airframes with the engines sent to other providers, waiting for a day that the actual airframe is worth putting back in the air, which is fascinating. It's not what you normally think of, but with all of the issues with Pratt & Whitney GTFs that are on Spirit's Neos, it's not outside the realm of possibility right now.
Right, Ned. And as we've reported, most of, if not all of the jets that Spirit had, well, prior to Spirit's failing, it had been getting rid of many of its aircraft. And I believe all of them, or at least the vast majority, were the new A321neos with the Pratt & Whitney geared turbofans that had been recalled and that had many, many problems. And so Spirit was planning to just fly its older A320ceos, all those new aircraft and new engines are now out of service, or a lot of them are. And those engines are in such high demand because of the recall. Airlines around the world need those engines.
Absolutely. So it's going to be interesting to see what happens to the planes. And in terms of the COs, I don't know what's going to happen to them because they burn roughly, 15% more fuel than the NEOs. And right now, with fuel prices up as much as 70% in some markets, do many airlines want more COs? So we could see a lot mothballed. I bet you we're going to see some parted out. I mean, it's whatever the lessors think is going to make them the most money for those planes.
Right. Howard, anything else you'd like to add?
I think in the big picture, when we're looking at the low-cost sector in the United States, I'll be really interested to follow along as Allegiant and Sun Country complete their combination. In particular, I'm curious whether that flexible scheduling model, which both carriers have employed for years now, they're leisure-focused airlines that kind of surge capacity to meet demand during peak times of the week and also during the season, like during holiday breaks. They've been using that for years, and that could maybe sort of turn into the playbook for low-cost carriers in the US. Spirit was actually attempting to pivot to a similar sort of model before the fuel price surge kind of forced them out of the market. Granted, this is a way different way of going about running a low-cost carrier. Spirit was really focused on high frequencies into major US cities, and that was part of why they were competing so head on with the major US carriers. But Allegiant and Sun Country take this very different tack of focusing on secondary cities and maybe some underserved markets. And like you mentioned earlier, John, just running a couple frequencies a day, perhaps. But that might be the way forward. And I think just monitoring the Allegiant Sun Country situation is one of the bigger stories in the sector for the rest of the year.
The other one I'll be interested in watching is how Breeze and Avelo fare. They're not publicly traded companies, so we don't have great insight into their financials. And they're new and they're small and presumably have a much lower cost basis, so that gives them an advantage. They're also tend to be flying these secondary routes like Allegiant and Sun Country have been doing. So maybe that's the future, where the discount airlines focus on the secondary routes only, which actually was sort of historically what discount airlines have done.
I just wanted to say, in terms of the secondary markets, I just wonder where the limit is. Yes, Allegiant has said for years that there are hundreds of point-to-point markets that they could potentially add in the future. That's been their standard investor presentation. But as we see, Breeze and Avelo expand, you see them trying a lot of routes that Allegiant is not on and pulling out of a good number as well. So I just wonder, at what point do they hit some kind of cap on that growth? Maybe they don't. Maybe they have years of runway ahead of them. Maybe they do, but there's only so many Plattsburghs to Punta Gordas that they can fly, in my mind.
Yeah, I think that's a really good point about only so many city pairs where that model would potentially make sense. And you mentioning, John, how Breeze and Avelo are kind of coming up from the bottom of the market. There is some thought that this is just kind of the cycle that happens, this churn kind of at the bottom of the airline market, where low-cost carriers can only get so big before their costs kind of catch up with them. And then you have new entrants like Avelo and Breeze that kind of step in and assume that growth role again. So maybe this is just part of the natural cycle of the low-cost market.
So we have the legacies, the low cost, the ultra low cost, and now the Breeze and Avelo, the mega low cost. Ned and Howard, thank you both so much for joining us and sharing your thoughts. Very interesting.
Thanks for having us on, John.
Pleasure to join you guys.
That about wraps us up. You've been listening to Flight Global Focus, which is a production of Flight Global with audio editing by Lucy Johnson. If you want to get in touch with us or for commercial opportunities related to the podcast, please email podcast@flightglobal.com. Listen, rate, review, and subscribe wherever you get your podcasts. Join us again next week for more in-depth analysis covering the latest developments in airlines, defense, and aerospace. I'm John Hemmerdinger. See you next time for Flight Global Focus.